What's up, guys? Welcome back to the channel. Welcome back to another video. If you're stopping by the channel for the first time, please consider subscribing to my channel. And while you're at it, smash that like button for me. I really would appreciate it. Also, hit that post notification bell so that you're notified every time I upload a new video. Be careful down in the comment section of the videos. A lot of spam, a lot of scammers. I will never ask you to contact me by WhatsApp or Telegram. I also do not invest money for my subscribers, so please be careful. Don't get yourself scammed. If you want up to 12 free stocks, Webull is going to give you up to 12 free stocks when you try out their brokerage app. They're going to give you up to 12 free stocks. Click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. I'm going to also send you a free tutorial video to walk you through how to use the Webull app to make your first trade. All you got to do is DM me on Instagram at RichardFane28. Send me a screenshot of that new Webull account, and I will send you that free tutorial video to walk you through how to buy your first stock or ETF. The stock market, in my opinion, is the best way to build wealth in 2023, 2024, and 2025. And I'm gonna tell you why. If we rewind to 2020 and 2021, where the stock market was in its last bull market, everybody was dumping money into paper assets. And the reason people were dumping money into paper assets is because interest rates were super low, and startups, tech companies could borrow money dirt cheap, take that money, invest it into growing their companies. And everyone wanted to be on that rocket ship. I definitely was on that rocket ship. But something changed in the stock market in 2022. People started taking their money out of the stock market, specifically institutional investors, hedge funds, billionaire retail investors. And the reason they start taking their money out of the stock market is because companies wasn't growing anymore. Or at least those startups, those tech companies, those fast growing companies started slowing down. Why in the world would they slow down? For one reason: interest rates. See, in 2020 and 2021, interest rates were super low. And like I said, when companies can borrow money cheap and invest it into growth and make a profit, all is good. But when interest rates go up and money is not cheap anymore, it's pretty expensive to borrow, companies don't borrow. And when they don't borrow, especially startups, tech companies, and fast-growing companies, then the stock market doesn't do as well. And that's where we're at today. Now, in 2023, though, investors are starting to put money back into the stock market, even though interest rates are high. And what they're putting their money in predominantly is what we call value companies. I mentioned growth companies earlier in the video. And let me tell you the difference between a growth company and a value company. A growth company is a company that takes all of their resources, whether it be money that they borrow cheaply, whether it be their profits, and they reinvest all of that money into growing their company. They don't pay a dividend. They don't share any of those profits. They save those profits and then they reinvest them back into growth. That's a growth company. A value company is a more mature company. They don't grow as fast, but they're very profitable in most cases. And they typically will take their profits and they will save them, or they'll go ahead and distribute them in the form of dividends to their shareholders. Now, they won't distribute all of the profits, but a portion of the profits they will distribute in the form of dividends. And with those dividends, investors like you and myself, institutional investors, billionaire hedge fund investors, we can take those dividends for cash flow, or AKA passive income, where we can actually take that money and use it. Or we can take those dividends and reinvest them back into buying more shares of that particular value company or particular value ETF. So those are the things that you have to think about when we're talking about the stock market. Am I going to invest in value, or am I going to invest in growth, or do a combination of the two? And a fund that I like is an ETF that basically does both, which is the S&P 500 index. So you got your top 500 companies in America in that fund, right? You got growth companies, which are the fast growing companies. And then you got the value companies, which are the more mature companies who pay a dividend in most cases. But I think the stock market right now is the best opportunity in order to be able to build wealth over time because of these high interest rates. Like I mentioned earlier in the video, with high interest rates, people tend to, or investors tend to, not put as much of their money into the stock market. So therefore, companies don't have those resources coming in. They can't borrow money cheaply. So a lot of times they don't grow, which does what to the stock price? It goes down. Because the stock price is measured on how well the company performs financially. And if that company is not performing well financially, typically the stock price will go down. And that's what you see all across the stock market and all paper assets. But it does present an opportunity for investors like us to be able to buy these investments at a discount. And at some point, when interest rates start coming down, guess what's going to happen? New bull market's going to start. And all of those investments that we've bought at a discount are going to do what? They're going to go up in value. They're going to create net worth for us. So that's why I'm telling you, man, if you're not invested right now in paper assets, consider it. Now, I'm not your financial advisor. I can't tell you what to do. I can only tell you what I'm doing and recommend you consider it. See, what I'm doing is I'm taking money every single month through dollar cost averaging, and I'm buying my favorite ETFs and my favorite index funds. Now, I don't get into buying a lot of individual stocks. You guys know I buy some. Companies like Tesla, Apple, Bank of America, Wells Fargo. I'll buy those individual stocks with about 20% of the money that I invest. But 80% of the money that I invest goes into ETFs and index funds. And the reason I do that is because they're passive investments. See, ETFs and index funds, they track an index or they track a sector. It's not one individual stock I'm buying. I'm actually buying a basket of companies. I mentioned the S&P 500 index earlier in the video. I invest in an ETF through Vanguard called the Vanguard S&P 500 ETF VOO. That particular fund tracks the S&P 500 index. I also invest in an ETF that Vanguard offers called Information Technology ETF VGT. It invests in a sector, the tech sector. So that's where 80% of my money goes, into ETFs and index funds, because I don't want to be the expert. Vanguard is the expert. They've already vetted, and they have a long history of performance on those investments. I don't want to be on the hook out here trying to pick individual stocks and be the expert. I won't win. I will not win that game. So I don't try it. And I recommend you guys not try it. Yeah, if you want to take 10, 15% of your money you're investing and buy you some individual stocks, that's cool if that's what you want to do. But the bulk of your money should be going into ETFs and index funds. This is the greatest opportunity, man, right now to build wealth is through paper assets. Don't miss this opportunity, guys. Like I said, in my opinion, your new bull market is going to start in 2024. That's just my opinion. You guys might disagree with that, but I'm giving you my opinion. This is a my opinion channel. So that's when I think it's going to start. So let's make sure we're invested so that we can build our wealth. If you want them 12 free stocks from Webull, you got to click on that link down in the description box. Open up that new Webull account today. Go get that free stock. Go get that free money. If you're stopping by the channel for the first time, please consider subscribing. Share the video. Smash the like button. Thoughts become things. If you can see it in your mind, you can hold it in your hands. You guys keep chasing your greatness. Never stop believing in yourself. And I'm going to catch you on the next video. Peace. Today's video is sponsored by my company, RF Financial Consulting. And in my company, I work with individuals just like you through financial mentoring and coaching sessions. And in those 1-hour sessions, we talk about strategies to help you get to your financial freedom, whether it be through real estate investing, stock market investing, creating additional streams of income, credit card arbitrage, or starting and growing a business. If that's something that you might be interested in, there's an email address in the description box of the video. Send me an email and let's discuss if I'm the right fit for you.